Party proposes pushing the vote on the country's controversial bailout by another day. But my next guest says this is no Greece. The market will soon realize this is an isolated incident in a country so small with a very small limited economic output that it won't have much of an impact. Joining us now is Paul Schatz, president of Heritage Capital. And Paul, it's great to have you on our program. I know you just heard Phil Flynn's report on how the commodities markets are reacting to Cyprus. And yesterday, it seemed like investors were nervous and then they became calm. But perhaps today they are nervous again because maybe this isn't with Cyprus just an isolated incident. Maybe there will be more of a ripple effect than we were perhaps anticipating earlier. Is it time? Can you really put it in the rearview mirror?
Yeah, I think we heard from the ECB over the last couple of years, whatever it takes, they're going to save the euro. Whatever it takes. They're not even going to have to load a revolver to save Cyprus if they even want to save Cyprus. I think Cyprus is a one-off. There's a lot of air under the markets. No, we're up roughly 10% on the year in equity, so of course any little possible reason to pull some profits off the table, people are going to do that.
Right, right. And I think you just hit the nail on the head. Any little reason at all. We had such a run on the Dow. Now we're looking at 3 consecutive days of losses. So could this just be almost like an excuse to run for the exits? Where do you think we are in this equity market cycle?
Well, I don't think anyone's really running for the exits. Yeah, Sunday night, the futures were down significantly. We were looking at a 200 to 300 point decline in the middle of Sunday night for Monday morning. Didn't even materialize. I think you've got still so many people on the outside wishing they were in, and they're waiting for that tiny bit of pullback. You've got a little bit of pullback. You mentioned 3 days down. I'm waiting for someone to say, well, that was a correction, now we're off to the races again. I think we're closer to the end than anything else in the rally. And this rally is really from the November lows. It's been a dramatic rally, almost in straight line fashion. You've barely got more than 3 days down. So for my money, I would never throw new money into a market with this much air underneath it, this much rally already in the rearview mirror.
Okay.
And even if we're going to 15 or 16,000, there's going to be some kind of pause first.
You know what? I'm so sorry to interrupt you, Paul. I just want to direct our viewers to some breaking news. You can see it at the bottom of your screen there. The Cyprus House Speaker is saying that a vote on the bank deposits, whether or not to tax them, will go ahead. So let's watch the market here in the U.S. very carefully for any kind of reaction. We are seeing the Dow down 44 points, 14,407. Again, Paul, I do apologize for interrupting, but that was a fairly important bit of breaking news. So let me get your take then on how you should be investing right now around this level on the Dow. You said no new money right now.
Right. For my money, I would not throw new money. If you were absolutely, if it's burning a hole in your pocket, you can't stand to hold on to cash, I think you've got to be really careful. You must dance close to the door. So if you had to put money to work, I'd definitely be conservative. I would not be in these risk-on, high beta plays. I think that's crazy. For me, if we have some more if the Fed comes out tomorrow with anything, hard to believe, more good news out of the Fed, but if they do, I'd be a seller into a Fed pop. I would not be a buyer and hop on the bandwagon. I think we're close to the end. And let me say this. People have been talking about the end of this bond bull market at least for a decade.
They sure have.
I think rumors of the bond market's demise have been greatly exaggerated. Bonds have come down dramatically. Sure, they could go down some more, but I think we're coming closer. I think the bonds are a second half of the year play. It's already the middle of March. We're not that far away from what I think is a tradable and decent rally in the bond market.
Yeah, we see people running right to the safety of U.S. government debt with any kind of rattling going on anywhere in the world. Paul, we have to leave it there for time. Paul Schatz,
thanks.
Always great to have you as a guest.
Good seeing you.
Likewise.
Okay, we want to bring